Hey traders, Gavin McMaster here from Options Trading IQ, and today I've got 3 trade ideas for you this Thursday. Just a quick reminder that everything discussed is for educational purposes only, is general in nature and does not take into account your financial circumstances. So idea number 1 is on Home Depot. This is an earnings bull put spread. Looking at around the 15 delta, 5 points wide. If we do 2 contracts, that's going to risk about 870 and we're going to generate premium of about 130. We zoom in a little here, and we'll just change this to percentage. I'll have to rezoom. We've got about a 7.5%, 8% margin for error on the downside. And if we go over to Market Chameleon, we can see that the implied straddle, or we could call this the expected move, is only about 5.8%. So we're pretty far outside the expected move for a 15 delta bull put spread. Now, this is a fairly high risk trade to do something like this over earnings. There's not a lot you can do to adjust if the stock makes a big move. I'll share some ideas if that does happen, but I think it has a pretty high probability of success. If we just go back to Market Chameleon, you can see here the last few earnings announcements. We've seen pretty mild movements in the underlying, so pretty good track record of reasonable performance over earnings announcements. Trade number 2 is another bull put spread, this time on Meta. Again, around the 15 delta for the short strike. Gives us lots of room to the downside. The stock's currently at about 605. Short strike here is 525, generating about $140 in premium and about 860 at risk. The last example, another bull put spread on Spotify, one of the strongest stocks in the market, if you ask me. Looking at the chart here, we can see the moving average is nicely stacked. The 21's moving upwards, the 50's turning upwards, and we're way above the 200, which is also rising. We're seeing really strong accumulation here, and the stock is breaking out to a new high as well. So very, very bullish, and we're not at all overbought on RSI. So it seems like there's plenty more room to the upside. Fairly likely that it's going to stay above the short strikes of our bull put spread. And finally, one little bonus trade for you is a hedge trade, just in the case the market does drop again. In this case, we're doing a bear put spread on the NASDAQ, right at around the 26 delta. Again, 5 points wide, 2 contracts. That's going to cost about $200, but gives about $800 of profit potential. So that'll be a nice little hedge trade on those 3 other bull put spreads. That's optional. If you're happy taking the full bullish exposure of those 3 trades, you don't need the hedge trade. So thanks for watching. If you've got any questions on any of those trades, feel free to leave a comment below. Have a great day and best of luck with your trading.